What's going on, guys? My name's Emmanuel and welcome to my channel. Guys, we recently crossed 300 subscribers. I want to say thank you to each and every one of you guys. I love you guys and I appreciate you. So in today's video, guys, we're going to be running through a quick analysis of the very best, the creme de la creme of REIT stocks. And if you want me to do a more detailed financial and competitive analysis of all of the REITs that we talk about today, then drop me a comment in the section below. And if you're not sure what a REIT is, don't worry, I've got you covered in this video. So guys, get strapped in, get ready. We've got a great video for you today. Let's go. So a REIT is an abbreviation which stands for Real Estate Investment Trust, and it's incredibly popular amongst income-seeking investors. So a REIT is a company that owns and operates different type of real estate properties, and these can be commercial or they can be residential. So for example, you have the likes of hotels, you have healthcare facilities such as hospitals or care homes, you have data centers, retail centers, apartment buildings, telecom towers, and so on. These are all forms of REITs. So the reason why REITs are popular amongst income-seeking investors is because a REIT is required to pay its shareholders 90% of its taxable income. Guys, that's 90%. Let that sink in for a minute. So essentially, in effect, you're receiving rental income in form of dividends from properties that you don't own, but you own the company that owns the property. It's amazing. So needless to say, guys, the dividend yields that you can get from a REIT company is typically higher than normal stocks. Now, guys, saying that, there are incredibly significant dangers when it comes to investing in REITs, because you have to remember these guys are paying out 90% of their income to shareholders. I'll cover these dangers in another video, so if you haven't yet subscribed, please guys smash the subscribe button and also hit the like button. It helps my channel grow. Now without further ado, guys, let's jump onto the laptop and I'll show you my favorite REIT stocks. Okay guys, so the first REIT stock that we'll be taking a look at is actually one of my favorites. It's Medical Properties Trust and the ticker symbol is MPW. And this REIT is a healthcare facilities REIT, guys, and they are one of the largest hospital owners. And according to their current quarterly report, they have 389 hospital facilities, and I mean they have approximately 41,000 licensed beds in 8 countries across 3 continents. Okay guys, so the main way they generate their revenue is predominantly through 3 types of hospitals, and they range from general acute care hospitals, inpatient rehabilitation hospitals, and long-term acute care hospitals. And as you can see with this pie chart here, that the bulk of their revenue comes from general acute care hospitals. So these are pretty much hospitals that attend to urgent medical conditions. You know, the A&Es, the accident emergency type hospitals, the major trauma centers. So they take care of these patients, operate on these patients, usually within a relatively short term. So as you can see here, guys, their revenue as well has been growing at a fast rate. It's growing at 20.22% year on year. And even looking at their rental revenue as well, you can see from all the hospitals that they own, it's been growing year on year. And currently, even on the trailing 12 months, during the pandemic, they've still kept up with the rental revenue and improved it year on year. Taking a look at their net income as well, it's as a result of increasing revenue, their net income has been growing up year on year. And as you can actually see here, guys, back in 2018, they actually had a spike of net income. And that is predominantly due to a sale. So if you have a look here, gain or loss as a result of sale, the sale netted 719 million for this REIT. So that's brilliant, because with that sale, that actually had a direct impact on the total cash in hand for MPW. And if we take a look at their balance sheet, you can see here in 2017 they had total cash of 171 million, but then they had that sale of their asset and it jumped up to 820 million and now as of 2019, their total cash position is sitting at 1.4 billion, which is incredible. Taking a look at their operating margin, guys, and it's sitting at 68.23%, which is a phenomenal operating margin. Which again, if you've been watching my videos, you would know an operating margin of 10-15% or higher is excellent, because that means that for every $100 that this company makes, 68% of it is kept as earnings. So that's an incredible operating margin, one of the highest I've seen. Taking a look at their current ratio is sitting at 8.21. Incredible job from the management. They've been able to keep their total current assets way above their financial obligations. And also, just for reassurance, guys, I like to take a look at the expected growth. And also, guys, I like to take a look at the analysts' predictions in the next coming months and years. You can see here is expected to grow at 66% by September this year, 44%, and to end the year off at a 50% growth in revenue is incredible. So, despite a pandemic and despite what we're going through, analysts are still expecting huge growth from MPW. MPW currently has a juicy yield of 5.95%. So taking a look at MPW's charts, they're currently 25% down from their 52-week high, and considering the expected growth by the end of the year and onto next year, I see a lot of potential in the market price, and that's what I've been loading up on my position. So the second REIT stock that we're taking a look at today is Digital Realty Trust. Ticker symbol is DLR, and this REIT is a data center REIT. Okay, so they own, acquire, develop, and operate data centers across the US and across the globe. So they're currently one of the largest publicly traded REITs in the US. They're currently sitting in 5th place. And globally, they have 198 data centers in 12 countries. In terms of revenue generation, DLR actually have an incredible list of customers that use their service. And just taking a look at their top 20 here, you have big names such as IBM, Facebook, Oracle, LinkedIn, you have AT&T, JP Morgan, Comcast, and Uber. So taking a look at their dividends, guys, their yield is currently sitting at 3.12%, which is okay. But they do have a dividend safety score of 94, with 99 being the highest. So it's regarded as very safe. Taking a look at their rental revenue and their total revenue, it's been growing year on year at a rate of 11.69%, which is really impressive. Year on year, you can see from 2015 to where it is now in 2019, sitting at 3 billion on rental revenue, and their total revenue is at 3.2 billion. And with their trailing 12 months, they're also on track to hit 3.1 billion at the moment. So looking at the net income as well, guys, as you can see, there's been year-on-year growth. And funny enough, they actually also had a spike in their income. And same as MPW, their spike came due to a sale of an asset. So that's always good, because that increases their total cash position for that year. But overall, it's been growing steadily and consistent year on year. Taking a look at some of their financials, guys, their operating margin is sitting at 15.95%, which is not too bad. Taking a look at their balance sheet, guys, their total current assets is sitting at 625 million, and their total current liabilities is sitting at 1.2 billion. Now that gives it a ratio of 0.61%, and typically I like for the ratio to be at least 1 or above. But taking a look at their long-term assets is sitting at 23 billion, and their total liabilities are sitting at 12.4 billion. So their long-term assets are in a better position than their current assets. Taking a look at the analyst's expected growth for this REIT, and again, expecting a good consistent growth rate of 3.7% by June. End of year is 4.5%, and end of next year is 9.2%. So they're expected to continue to increase their revenue and sales year on year. Okay, taking a look at their market price action, DLR is currently 9% off its 52-week high. So there's a lot of room for growth in this company. So keep an eye out on this company, guys. Alright guys, so moving on to our next stock, we have Crown Castle International, ticker symbol CCI, and this company is a telecom tower REITs. They are a market leader in connectivity and communications infrastructure. And as you can see here guys, Crown Castle owns and leases more than 40,000 towers. And remember guys, these are cell towers, and they have 65,000 miles of fiber. And the reason why I chose this stock guys is because with the introduction and transition into 5G and an increase of network activity usage year on year, I feel like this company is strong enough to benefit from this transition going forward. In terms of revenue, they have a massive clientele, you know, with the likes of AT&T, T-Mobile, Verizon and Sprint. And just these four big players, they accounts for 73% of Crown Castle site's rental revenue, which is a huge amount. Taking a quick look at their revenue as well, guys, as you can see here, they've been growing year on year. It's growing at a rate not as fast as MPW or Digital Realty. Their growth rate of revenue has been 5.54% year on year, but it's still good growth, good consistent growth. As a result of increase and growth in the revenue, you can see the net income as well has been growing year on year. And taking a quick look at the operating margin, guys, it's currently sitting at 27.48%, which is again not bad. However, taking a look at their PE ratio, it's sitting at 97.27. Now, as Peter Lynch always says in his books, the PE is in relation to the earnings per share. So what that means is it will take you 97 years to get a return on your investment at the current EPS. So that's extremely high, guys. And to be honest, I've got this stock in my watch list, but I would definitely be waiting for a pullback of some sort to kind of get that PE ratio down. The dividend yield is sitting at 2.84%. And CCI is currently trading at its 52-week high. I mean, I'm probably going to just keep this in my watch list for now. It's quite expensive as well, but it's a great company, good REIT to have in your watch list. So the next stock that we're looking at is Realty Income Corporation, ticker symbol O. And I've actually done a detailed analysis of Realty Income Corporation, and we'll put the link in the description below. But having a quick look at their financials, guys, they've got a respectable PE ratio of 38.01. Their dividend yield is sitting at a healthy 5%. They have an impressive operating margin of 49.57%. And their current ratio is much closer to 1. It's sitting at 0.89%. Bonus with this stock, guys, they do pay them dividends every single month. So check that video out. Click the link below, guys. I don't want this video going on for too long, so I'm going to give you some honorable mentions. First is National Health Investors, ticker symbol NHI. You can do your due diligence on those. LTC, ticker symbol LTC, long-term care. I've also done a long video and deep analysis of this company. I'll put the link in the description below. But they're sitting at a healthy dividend yield of 6.08%. Another honorable mention is Equinix, ticker symbol EQIX, and they have the lowest dividend yields of the bunch, at sitting at 1.53%, and their PE ratio is incredible, it's to say the least. But they're also a data center REIT, so definitely worth checking them out, guys. Alright guys, I hope you've enjoyed the video. Remember guys, REITs, there are significant risks with that type of investing, and like I mentioned at the start, I'm going to be doing a video that covers all of the dangers. So that's another cue again, guys. Hit the subscribe button, smash the like button, and also guys, in the description below, if you want to start investing, a broker that I can recommend is Trading 212. If you click the link below, you get a free stock, I get a free stock. And with that said, I hope you've learned a lot and gained a lot of value from this video today. And I'll see you on the next one, guys. Take care.